Good morning. Welcome everyone to this weekly live room here at binary.com. Thank you for joining on this 23rd of September 2013. And this is going to be a very interesting session because we're going to take a look at the impact of FOMC last week. And there was a major impact. A huge movements in the market and of course a major decision made by the Fed. So this definitely has a tremendous impact on what we can expect in the next few weeks. So we're going to discuss that and more, of course, in our session. So make sure to wait for those analysis for the very long term and the short term. Once again, this is hosted by binary.com. My name is Chris, and we're going to explain that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video is for educational purposes only. So please pause the video to read the entire disclaimer, and I welcome you back and thank you for your attention on that. So, as always, we're going to have a market commentary, a live market commentary in fact, but next week we're going to have some new content added automatically on the chart. So I think that you definitely should watch out for that. Take a look next week. It's going to be very interesting. As always, we have a weekly live, but it's also going to be recorded. Live session is 7 a.m., but the recording is available via blog.binary.com/weekly trading room. And I encourage you to pause the video to register your name and email address, and you'll get a heads up when that is ready. Today's goal, we're going to take a look at the currencies, but first of all, of course, the economic calendar to see what is going on here. This week we have a lot of red tagged news events, but nothing particularly of very high importance, such as FOMC or NFP or interest rate. We have Draghi speaking on Monday and Friday, and we have today's Swiss chairman speaking. Otherwise, just some regular high impact news. Please look at that yourself on every day. Alrighty, let's head over to the Euro-Dollar weekly chart. And I said the FOMC had a big impact, in fact, and it did. It had a tremendous upside momentum. And the weekly chart, you can see, if you look at the last week's candle, obviously a very bullish candle. First of all, we have some almost 250 pip bullish candle. And second of all, the candle closed very near the high. So that means there was no selling pressure. The bulls remained in control the entire week. Thirdly, that weekly candle is breaking above a top indicated by the red box that I'm going to draw on the chart. And fourthly, it's breaking through the resistance trend lines indicated by the purple lines, two of them. So obviously the bullish momentum very strong here. And if we zoom out, you'll see what those purple lines entail, what they are. And they're in fact connecting, of course, those tops. So you can see that because we're breaking above those purple lines, because we're breaking above the tops, we're also hereby breaking kind of out of the range we've had on the euro dollar for a year almost. So a very important moment. Now, it's not to say that all resistance has been broken. Obviously, we have 136 and 137 area is a very strong resistance zone. So it's not to say that we're out of resistance, that we've cleared all the potential resistance, but we're definitely pushing through the range that I've discussed here of the weekly range. And then the likelihood, looking at the momentum, that we'll maybe pause and then break later up to higher levels is high. Now, if we look at this weekly range, you can see there is space here to go to the upside. And in that regard, it would probably something like this will happen, indicated by the green lines on the chart. So potential targets here, you can see the green line, the purple lines indicating the wedge that is about to break, and the second purple lines at the tops indicating the bigger wedge. So if we put a fib on the first move up, a Fibonacci retracement level from the green circle to the green circle, you can see we stopped at the 50. The target is 141 at the minus 272, 141.60. And if we put a fib on the smaller move up, we have the new green circles, we have another 50 fib, and the target, of course, is the 136.40 first of all, but later on 138.50 zone, and then the 141.40. So those are the levels to look for. small push up to 136.40, stop at 137, then up to 138.40, 50, and then up to 141.40, where we should see resistance for some downside. All right, that's the most likely path of least resistance. And you can see if we zoom back to our weekly chart, it'll be very important to see if we break above last week's high, we can continue, but beware of the 136.40, 136, 137 zone, or we can maybe make a small retrace of last week's candle, then find buyers to push this up. Anywhere in last week's price zone, we'll probably find support. For example, about halfway, where we also have a broken trend line. Let's move into the day chart and focus a bit more on the shorter term. You can see an exact 50 fib bounce. So a small push up to the 136.40 is likely, maybe another bull flag and continue to 137, another bull flag and continue to 138.50, another bull flag and continue to 141.50, excuse me. And that is something that could happen, because if you look at the FOMC announcement, which was of course that no tapering signal, that means that at least for the coming month or two, probably, there's no signal of any decrease of the tapering, which would mean, usually speaking, dollar weakness. And we should see this euro dollar continue in this breakout to the upside. So any move down should encounter support, as I said. So let's take a look at the 4-hour chart and focus on that recent move up. And you can see that very strong move up here, right in the middle of the chart, that was caused by FOMC. So we could move up right away, but we shouldn't, by all means, go lower, usually speaking, than this support level. Because if the currency were to go back all the way there into that zone of the green, those green lines, there would be a high likelihood of buyers stepping in, okay? So we shouldn't go lower than 133.18, sorry, yeah, 133.80, excuse me, and 133.40. That would be probably the very max. So we can put a fib from here to here, and any of these levels should be support. It could be even the 134.20, but if we break above here, the smaller bull flag that we're making, that alone could be already a continuation, in fact, of this move. All right, if we break the green lines here, we could already continue, as I said, to the upside. So either break out of that bull flag by the light green lines or hook back to these fibs. We'll see continuation probably on this euro dollar. Let's move over to the pound dollar. Now the pound dollar has basically the same setup, but there are some differences. First of all, the pound dollar is at major resistance, because we have a trend line that connects all the tops, as you can see, purple trend line, and that is, first of all, major resistance. Second of all, we're at an 886 Fibonacci retracement level of the last move down. That too is a major resistance level. So both very important for this pound dollar. Third of all, if you look at the weekly candle, you can see that price responded to the level. We have a pretty big wick on top of the euro dollar. The euro weekly candle hardly had any wick. You can see the cable obviously has a wick about half of the candle. So the currency saw that level, it saw and respected the trend line and the 886, indicating to us that that is a difficult level for the currency. Not only is it, by the way, a trend line and 886 fib, but it's also the yearly high. It's 2013's pound dollar high at 161.70, 80. So no wonder that the currency respected that level. So for me to become a buyer, I'm looking specifically for a break above last week's high and above that resistance zone for a move up to 163. Until then, I'm still cautious because because of the resistance there. Once we break that level, 163 is very important. because you can see obviously we had 3 tops right in here. That is not an easy level to crack. So the space is from 161.80 to 163.30, and we should expect resistance there again. If we break 163.30, well then obviously we have space back to 166 and probably 167. All right. Now the downside, I'm really not even thinking about downside unless we break this green trend line channel that I have on the chart, and that's something you should also have because that's very valuable to have to indicate if the upside might be over. All right, so I would definitely encourage to keep this channel on the chart. Very important. Otherwise, let's move on to the 4-hour chart. And you can see the channel on the 4-hour chart here. And personally, I think a large level support should be this level. Actually, we bounced already off it. So there is a likelihood of continuing now that we've retraced so deeply. And the short-term momentum would indicate that most likely we will break above 161.80. But because it is such a huge zone and we did respect it so much, anything below that is still a bit more risky. So the higher green arrow is a better space to trade than the below there, but the likelihood is still pretty decent that we will break to the upside. And one way of measuring that is if we can break above, for example, 160.60, then the likelihood of continuing up is already higher. While the green levels indicate major support zone that usually speaking we should not break. All right, we shouldn't break lower than 159, for example. Alrighty, those are the zones I'm looking for on the pound dollar. I suggest we move over to the odd USD, and that too moved up a lot. All right, we broke above the red resistance line, and on a shorter time frame that was obvious, and pushed up to the 382 fib. Now that caused the respect here too. The just like the pound dollar, the odd dollar stopped at the target, the minus 618, and the 382 confluence. So the next move, if we do push above that level, is up to the 50 fib at 97.14. That is the bullish space on this odd dollar between 95 and 97.14. That's what I'm interested in trading, and not looking for downside because at the moment we are in an uptrend. If you zoom into the day chart, you can see that. Of course, we had this tremendous downside, but as of late, we are making higher highs and higher lows. So we should expect, or look out at least, for continuation to the upside on this daily chart. And I'll zoom into the 4-hour chart and you'll see the same. And in fact, we can put a nice trend channel like this on our chart as well. And we could expect this odd dollar to continue in this uptrend channel for a while. All right. Now, if we break this uptrend channel, of course, then we can look again for maybe downside continuation. For the moment, though, the channel is very nicely built, and we can expect maybe some upside continuation, at least up to the 50 fib, which would be the next major resistance and potential turning spot for the odd dollar at 97. Let's take a look at the dollar yen now. The dollar yen broke out, but broke out with wicks. And you can see that caused the currency to fall and has found support. Because if you look at last week's candle, it's a doji, but it has a significant wick at the bottom, not at the top. The 2 weeks prior to that, we had wicks at the tops, indicating some selling pressure and that the buyers could not remain in control. Last week, we did get that downside, but it encountered upside momentum and found support at the 618 fib on this chart. So obviously, maybe some upside could be possible. Then again, it's still a doji. So let's take a look at the day chart if we can find some more information. Of course, the purple lines on our chart indicate a triangle and wedge that was broken. And if you look at the break, It was a decent break, hook back, and continuation, but the continuation failed. It never got sufficient follow through. All right. So after that, because of the lack of power, we hook back deeper. All right. So it's like a second hook back, in fact. The first hook back here, and the second hook back lower at the 618 fib off the same trend line, in fact. Because if we extend the trend line just a bit, you can see we hook back at the trend line twice. And now we've got daily engulfing twins. So maybe a down move will find retracement for more upside. For me, the bullish importance is 97.80, yeah, 97.80. That's a very important line for the bulls and bears, in fact, because that's where I would expect the price not to break through. If it does, then it's bearish, more bearish than I think. If we bounce anywhere above 97.80, then the engulfing daily twins that we see here are in fact bullish signal for more upside. All right, and then we would have a breakout with a double pullback and continuation. So 97.80 very important. Anything above would have more upside potential, I think. Let's take a look at XAU USD, gold, and you can see, of course, that ever since the bounce here at 1180, we've made upside and we've bounced off the 50 fib with a pretty sturdy upside. So the important lines here are 1290, this bottom, and 1376, this top. Those are very important because if we break above 1376, that would indicate the continuation of bullishness. If we break below 1290, then probably we're retracing deeper, maybe to the 618 fib, maybe to the 786 fib, which still could be bouncing areas for more upside. If we do break above 1374, which is my primary analysis that I would think that we would do that, but I'm waiting, of course, for the confirmation of that breakout above 1370, then the target is 1500. All right, 1500 or maybe even 1520, 1550 area, because that entire zone was those broken bottoms here on the left that now become resistance. So that wraps it up for today. That was the dollar yen, XAUSD, AUD USD, euro, and pound. Thank you so much for your attention. And actually, going to show you this link where you can register yourself at blog.binary.com/weeklytradingroom, and you'll get an email with the recording, or when the recording is ready, I should say, and you can watch it anytime. So make sure to watch next week because we're going to have some interesting new features here on the charts. And if you are live in the webinar next week, I will also share a special indicator with you. So make sure to be there live and you'll get a bonus for being there as well. All right, so thanks for your attention. Talk to y'all soon. Cheers.